Hi there, this is Elvin from Dr. Wealth. You might have seen the news about CapitaLand selling its stake in Ion Orchard to CapitaLand Integrated Commercial Trust. And this is not a small sum of money, right? And there is going to be a so-called preferential offering as well as a private placement. And I'll explain to you about this deal. And as a unit holder, okay, of CICT or Capital Integrated Commercial Trust, you need to eventually place a vote and decide whether to acquire this property, as well as if it goes through, whether you're going to subscribe to the preferential offering. Okay, so this video is hopefully I'm able to explain that to you well and help you make an informed decision. So Ion Orchard is a very famous and popular mall in Singapore, right? Most of you who are watching this video would know about it and have been there probably many times. And it is really right at the heart of Orchard Road. It is just above the Orchard station. Okay, so location-wise, it's definitely fantastic. Okay, it's even iconic in that sense as a shopping mall in Singapore. So this property is at valued at about, let me blow this up for you. It's about $3.7 billion. Okay, $3.7 billion. And what CapitaLand owns is just about 50%. So the other 50% is actually owned by a Hong Kong listed company called Sun Hong Kai. And they are still retaining the 50%. So CapitaLand is only selling that 50% to the REIT. And at $3.7 billion, this would make this property the most valuable property in CICT if the trust indeed acquire this property. Okay, because the highest value property now in CICT portfolio is Raffles City at $3.2 billion. Okay, so this is a very sizable acquisition, and therefore there needs to be additional sources of funding to make this possible. And to note again, this CICT is only buying 50% of Ion Orchard. So the other 50% is still owned by Sun Hong Kai. And this is another picture that's provided by CICT itself in their presentation slides. We know that they have many malls, right? Some famous ones like Plaza Singapura at Dhoby Ghaut, and as well as Raffles City, which we mentioned just now at City Hall. So they have no properties in the Orchard station until this acquisition, if it happens, right? Then it will add one more to its portfolio, and hopefully we can have more properties along this key shopping belt in Singapore, which is Orchard Road. And that's it. Okay, unlike the heartland malls, the malls in Orchard Road or even in the city area, these malls are more reliant on tourists. Okay, because tourists will usually go to where the best shopping area is, and Orchard is one of them, definitely. So their business will be highly dependent on the tourism numbers. And so we've seen that during COVID, a lot of all these malls suffered because there was no tourists visiting these stores. And therefore, if there is another major event that impact the tourism numbers, this could also in turn affect these downtown malls. And another aspect is that a lot of all these malls have those high-end luxury brands, boutique stores, and we also seen that the demand for luxury is softening, right? Probably due to higher inflation, slower economic growth, right? So the consumption for higher-end luxury goods have also came down. So this could also be another possible impact to the malls here. So other than that, I would still think that this is nonetheless a prestigious property that if you really want to own something in Orchard Road, Ion Orchard is likely the one to be. And CICT seems to be able to capture this crown jewel in Orchard Road. And another aspect is that after they bought this property, the Singapore properties in CICT portfolio will grow even further, right? So before this acquisition, the Singapore property will be about 93.7% of CICT portfolio, which is already quite a large number. But after this acquisition, if it goes through, it will increase to 94.2%. Okay, so I would always prefer a more Singapore-centric property portfolio, because if you take a look at all the properties around the world, a lot of properties have not done well, right? Except in Singapore, it's still pretty much resilient, right? We saw property crisis in China. We saw even in US, commercial property has not been doing well. So therefore, I always believe that Singapore properties our portfolio are a lot more stable compared to the rest. Okay, so I also tend to favor REITs with a big Singapore property exposure. Okay, before we continue, just a bit of a promotion here. Please do join our Dr. Wealth Telegram channel so that you can get more updates about all these market developments, news, analysis of stocks that you may be holding or interested to buy. I'll link in the description box so you can click on it, or you can just follow this URL. It will link you to our Telegram channel. So let's carry on, and this is probably the most important thing that investors will want to know, or unit holders want to know. So it is indeed a DPU acquisition, right? That means that by buying this Ion Orchard, the dividends from the REIT actually increases, okay, by 0.9% for the first half of 2024. That is the estimation, of course. But generally, you do want to see that this adds value to the new property adds value to the REIT. And this is actually the case. So even though it's not a big increase, but a 1% would actually help with DPU growth for CICT. As mentioned, this is going to be a large acquisition, so it cannot just come from its own cash reserve or just bank loans. The half of Ion Orchard will cost about $1.8 billion, and they figure out they need to raise via equity. That means raise money from unit holders to an amount of about $1.1 billion. Okay, and this $1.1 billion will be broken down into two tranches. So the first tranche is via a private placement. Okay, that is about 350 million. That has closed already because this is usually offered to institutions or even high net worth individuals. They get this first dip, so-called, okay? And they did manage to raise $350 million. It was 3.7 times oversubscribed, and the issue price was at $2.04, okay? The one that everyone can participate, not say everyone, every unit holders of CapitaLand Integrated Commercial Trust, CICT, will be this preferential offering of $2.007 per unit. And that would raise $757 million. So add together, you'll get about 1.1 billion. Okay. So the ratio for these preferential offering units is that if you own 1,000 units, you get to buy 56 units. Okay. So it's not free, you have to pay for it. Okay. And these are some mathematics. So if 1,000 units, you can buy 56 more units at $112.39 in totality. If you have 10,000 shares, then you multiply by 10. That would allow you to buy 560 units at $1,123.92. Okay, but some of you might be wondering, what are you going to do, right? One lot is 100 units. Now you get like 60 units or 6 units or 56 units. It's less than one lot. What can you do? You can actually round it, okay, to the number that you want. And for example, you have 56 units, you can opt for 100 units because million is 100 units. Okay, this case, you are trying to buy more. Okay, that means that when only there's excess units, that means there are some unit holders who don't want to subscribe, they can redistribute this to those who want more. Okay, so you can try a lot, right? Otherwise, you minimally will get 56. Okay, and if you have 560 units, you can go for 500 or 600. Okay, if you go for 500, that means you subscribe lower than your entitlement, and you will definitely get 500. If you go for 600, that additional 40 units is also again dependent on whether other unit holders give up their entitlements. Then there will be redistribution. So the good news is that when there's excess units, usually those who can round it off to the odd lot will get priority. Okay, so why not, right? If you, I would think that it makes sense rather than having an odd lot in this case. There's some other information about this issue that you should know. So the sponsor, CapitaLand Investment, which owns about 23.8% of CICT, have declared that they will subscribe fully to their entitlement. Okay, so they are going to buy the rights as well. So this means that they will maintain the shareholder percentage of CICT. So this is, of course, a vote of confidence for other unit holders. And this issue is also underwritten, right? This preferential offering is underwritten. That means that CICT will definitely get this $1.1 billion to buy the property. They are guaranteed by the underwriters, which is the manager, JP Morgan, as well as UOB Bank in this case. Okay, so money is not an issue, it's just whether people subscribe. But if you ask me, I don't think this is going to be undersubscribed, and I believe that most people will even go for excess units to at least round it up to the nearest lot shares. And don't forget, during the private placement, it was 3.7 times oversubscribed. And given Ion Orchard is a no-brainer, right? And it's yield accretive. So I don't think there's a lot of underwriting risk in this case. Lastly, you should of course know the timeline. Okay, there is going to be a EGM to carry out a voting, and at least 50% of the votes must vote for the acquisition of this property. And as I said, I don't think it is going to be a problem. I'm not sure whether the sponsor is going to abstain, right? If you don't abstain, they will have at least close to 24% for. You only receive the EGM notice and the details early October, and late October, early November is the expected date of the EGM. And once that's done, they hope to complete before the end of this year. Okay, the acquisition of Iron Orchard. So as I said, it's pretty no-brainer to me. I think overall it's a good deal for CICT. Yes, nobody likes a rights issue. Nobody likes a preferential offering. You need to cough out more money to buy more units just to maintain your shareholding percentage. But I do think that at the end of the day, it's still a good property, and it has been a while since REITs are able to do a rights issue because many REITs share price have gone down and it doesn't make sense for them to do equity raise. But CICT has managed to pull this off. That also shows that there's resilience in CICT's share price, portfolio of properties. So I do think that this is a good sign that the REITs market may start to look interesting again for investors. Okay, we do need more activities, right? Like this. Okay, good properties get acquired. So hopefully, Sun Hong can also sell the other 50% eventually. Okay, so I hope you get a better idea what this is all about and what you are expected to do for the following months. Okay, and let's see whether this deal gets closed or not. Thanks for watching. Give me a thumbs up, like the channel, subscribe to the channel, and I'll see you in the next one. Goodbye.